How to use your IRA for investing in real estate. Did you know that your IRA does not have to sit in stocks or mutual funds forever? You can use it to buy real estate, tax deferred, or even tax free. Most people have no idea that their retirement account can buy real estate. In this video, I will show you exactly how your self-directed IRA can invest directly into real estate properties. If you want to diversify your retirement portfolio from just stocks, then stick around. I'm going to show you how to invest in real estate through your self-directed IRA in cash flowing properties and long-term appreciating real estate assets. By the end of this video, you'll understand how to invest your retirement funds through a self-directed IRA vehicle without paying any penalties and following the IRS rules. You'll know exactly how to diversify out of stocks and mutual funds and grow your wealth and generate cash flow in the IRA. So what is a self-directed IRA? So a self-directed IRA is different than a traditional IRA because it allows you to invest in alternative assets. These assets can be real estate, gold, crypto, private equity, anything different than the traditional stock market equities. So in order to get started to transfer your traditional IRA into a self-directed IRA or create a self-directed IRA, you're going to have to work with a self-directed IRA custodian. And the great thing about this structure of an IRA is you, the account holder, control the activity of the investments. There's no one else controlling it for you. You are self-directing it. So what type of real estate can you buy in a self-directed IRA? Single-family rentals, duplexes and small multifamily properties, commercial buildings, land, storage units, mobile home parks, syndications, private equity funds, and even REITs, real estate investment trusts. And yes, you can invest passively. You don't have to actively manage the properties. And this can be done through your self-directed IRA. So what's the step-by-step to setting it up? First, set up the self-directed IRA with a qualified custodian. In the description below, I will list a handful of self-directed IRA custodians. Next, find the investment that you're looking to invest in. If it's real estate property, residential, real estate commercial, a real estate fund, a real estate partnership, identify what that property is. Next, submit a purchase authorization form with your self-directed IRA custodian. Next, manage the property through the self-directed IRA bank account. So if you are actively managing the property, make sure all revenue goes into the IRA bank account and all the expenses are paid out of the self-directed IRA bank account. And if you're investing passively, make sure you invest out of the IRA bank account and that the distributions or profits flow into the self-directed IRA bank account. When I say IRA, I'm saying self-directed IRA. So here are some critical rules that the IRS makes you follow. So listen up close. Number one, there cannot be a personal benefit with the property that you're buying. So you cannot live in the property. You cannot have your daughter or son or family member live in the property. It needs to be an arm's length transaction and there's no personal benefit. And that ties into point two, is that there's no self-dealing, that the arm's length transaction, meaning you're not buying the property from one of your family members, you're buying it from a third party where you have no affiliation with that person. Your spouse, your parents, your grandparents, or cousins or kids are all disqualified from buying or selling real estate in this vehicle. Remember, all transactions have to go through the self-directed IRA. You cannot buy the property personally and then have the IRA benefit from the distributions, or you cannot pay expenses personally for the self-directed IRA's property. Make sure to keep it all in one bucket in the self-directed IRA bank account where profits and expenses go out of the IRA. If you're buying a property yourself in a self-directed IRA, the banks only allow non-recourse financing. They will not allow you to personally guarantee or have full recourse financing individually on the asset if you own the asset or property in the self-directed IRA. So when pursuing a bank loan, only look for non-recourse financing. And there's big penalties. So if you break the rules, you would be subject to paying all the tax that you would have otherwise had to pay and a lot of additional penalties if you don't follow these rules. So here are the pros and cons of using a self-directed IRA to purchase real estate. So the pros are, once the asset's in the self-directed IRA, it is tax deferred or possibly tax-free wealth, depending on the type that you structure. That means you pay no taxes each year on the profits that you generate, and they continue to grow and compound over time as long as you keep the profits in the self-directed IRA. You're diversified from Wall Street, so no longer are you subject to the stock market going up or down. Your self-directed IRA now has control over the asset or made the decision on the real estate property or fund you invested in, and you are not subject to stock market whims. You have direct investment control, where you choose the investment that you invest in with a partnership or a fund or the property that you decide to buy in the IRA. The cons: there are more paperwork and there are rules you must follow. Another con is real estate investments are illiquid. So if you're going to need access to the self-directed IRA cash, real estate's probably not the right fit for you. And the last con is that it requires a special custodian, which is not a problem, but you do need to make sure that you have a custodian managing that self-directed IRA account. So let's focus on a real life example where you're going to invest with your self-directed IRA into a real estate syndication partnership or a real estate fund. So you have a traditional 401k that you generated $100,000 of value from your previous company. Now you decided, I want to open up a self-directed IRA. So now you transfer the funds from that 401k plan into the self-directed IRA plan through the custodian. Now you have your funds in the self-directed IRA account and the custodian approved all the paperwork. Now you direct the custodian to invest in the fund or in the partnership that you would like to invest in. Now, in this example, the investor invested in my Patriot Fund 5, and this fund is for accredited investors only. We get into what that is in other videos. In this fund, I buy self-storage facilities, mobile home parks, and small bay warehouses. Now, the self-directed IRA receives the benefits of the cash flow. So all distributions go into the self-directed IRA, and now the value of the self-directed IRA units that it owns in the fund is growing because the properties are appreciating over time. Now, one caveat of the self-directed IRA is that it cannot use depreciation losses. I did another video about the power of depreciation in real estate investments. Check it out in the comments below. But here is, once the money's investing through your self-directed IRA, you cannot utilize the benefit of depreciation. But the self-directed IRA vehicle alone already has the benefits of being able to defer paying tax. And then lastly is the reporting. So at the end of the year, the fund operator or partnership operator or general partner, they're going to be issuing a K-1, and that K-1 will go in the name of the IRA, and the self-directed IRA custodian will receive that as well, and that's the proper reporting for the performance of that investment. Lastly, you'll be working with your accountant and you'll be filing your taxes. Make them aware that you have the self-directed IRA, and they will file your taxes accordingly. So now that you know how to invest in real estate with the self-directed IRA, I want to show you in the next video, how do you analyze different real estate partnerships? How do you know that you've made a good real estate passive investment? We're going to get into that in the next video. Check it out.